All right, Scotty, here we are. It's mid-April. We're in the second quarter of the year. Catch me up on rates. What are we seeing in like the mortgage lending industry right now?
Obviously, we've seen rates come from in the last 6 months where they jumped up getting into the sixes and then about a month ago getting back above 7%. But now we're starting to see some decrease in rate movement. So rates right now on an average 30-year fix are in the mid to low sixes. And as inflation goes, rates go. We've seen inflation come down, not drastically, but it's lowering each month. And as inflation lowers, we're gonna see interest rates lower as well. I truly believe that by this summer, we will see rates possibly get into that sub-6 range, maybe the fives with a 5 in front of it at some point, and then onward in the next 12 to 24 months, I think there's a good chance we'll see rates come down into the mid to low 5s, even maybe the high 4s at some point. I mean, let's not get ahead of ourselves. But right now, we're sitting in the mid to low 6s. The market has been a little steadier than we've seen. We've seen rate fluctuations where within days, a week's time, we're seeing rates jump a half a point, 3/4 of a point, coming down that much, where it's all over the place. We're starting to see a little bit of leveling out, which is good for the market. And then if we can see just level decreases, I think that's gonna be pretty healthy for where we need to be.
What's some advice that you're giving your clients now?
For my clients, I think one of the main things is, listen, whatever rate we get now, it's a correlation to the payment. So it's, can you afford the monthly payment? Is that something you're okay with paying? And if you are, then let's go, because you can always refinance. If you're okay with making the payment now, the hope is that, and again, whether it's a year, 2 years, what have you, we'll be able to refinance, get a lower rate, and then lower their monthly payment. But you can't let just the rate itself dictate whether you're gonna buy or not.
I give the same advice. What I always say is I don't think the interest rate should be your reason for purchasing the home. I think you should have a bigger why. And it's usually something along the lines of growing family, or the opposite, empty nesters wanting to move, big life changes, wanting a better quality of life, something along those lines. That's why you should buy. And what the rate is like, you just kind of work with it. If you have to get a little bit higher rate, hopefully we can get you a more aggressive price. And then like you said, when the time comes, we'll talk to Scotty, we'll refinance, and you'll have the best of both worlds. But I think that people hear the news about interest rates, high interest rates, and they end up on the fence. And then they're continuing to pay rent. Their rent is continuing to go up. And then at the end of the day, they're missing out on equity. They're paying their landlord's mortgage. And they're not getting like that elevated quality of life that they would have if they just bit the bullet, got a higher interest rate.
Same thing, I hear it all the time from clients is, Scott, I'm gonna wait. The market's not good right now and rates are so high. This is also, these people are saying this they don't understand the context of where home prices are, where they've been, and same with historical average of mortgage rates. I mean, this is just kind of fear-mongering that they hear on the news, or their neighbor or somebody's telling them like, oh, it's not a good time to buy because rates are so high, and it is what it is. That also leads me into the whole, where right now, from an inventory standpoint, we're very low on inventory. If you're gonna buy something now where a home is, let's say, $500,000 and rates are at 6.5, but you're saying, I'm gonna wait until rates come down into the mid-5s. Who knows when that's gonna happen, number one. Number two, by the time that happens, that house that you could have bought today for $500,000, that house is gonna be worth $550, maybe more. So you're gonna sit on the fence when you could have got that house, built that equity. If you can manage the payment, that's great, and you can always refinance. But if you're just playing the waiting game for interest rates, maybe you shouldn't be buying.
It's the same thing that I kind of see, on our side with buyers.
And then I'm sure you hear it too, is I get buyers saying, well, I think prices are gonna come down. I'm waiting for the market to crash. I think that values are way inflated.
In my opinion, that person's not really a buyer. That's someone that wants to take advantage of a market or time the market. Usually doesn't work out. You end up sitting around waiting for something to happen, and then while it's happening, you're waiting for something better, and you always end up missing it. The saying is, time in the market is better than timing the market. That's true. It's a cliche for a reason.
Right. And also you have to understand, what's your geographic region? What's your local market? Because the market here in Chicago versus, let's say, a market in California or Austin, Texas, or Nashville, or areas in Florida where you had home prices appreciate at insane levels. Those areas, yes, prices might be coming down a lot more than you'll see in Chicago, where here in this market, I would tell you that we maybe don't see those crazy high levels of appreciation, but then we don't see those lows. We don't see, crazy deceleration in values as well. So it's one, it's understanding what market you're in. And then number two, when they're waiting for prices to come down, and like we've said, it's a strict sense of supply and demand. It's economics 101. There is way less supply than there is demand. There's a higher demand. We're not going to see, in this environment, we're just not going to see prices come down that much. So better to get in now, and again, as long as there's low inventory, prices will remain at their levels they are, and more likely than not, they're going to appreciate.
Yeah, it's almost the opposite. Like, we're seeing prices still go up, and that's just because supply is so low. Like, it's not like, oh, it's kind of low, but there's a ton of demand. I think demand is relatively low, but when you look at it compared to supply is just so low that it's like anything that drives demand a little bit, whether it's seasonality, whether it's a headline or a downtick in market rates or whatever it is, it just becomes competitive.
And we're forgetting now, if market rates come down, rates lower, affordability is higher, that's going to lead to a bigger buyer pool. It'll free up some inventory, so you get a lot of people that are sitting on rates in the 2s and 3s that don't want to give up their properties, understandably. But eventually, as rates come down, some of those people will eventually sell and kind of free up their properties. But once rates come down, affordability goes more, gets greater, you're going to see a bigger buyer demand, and then we're going to end up where we were a year or two ago, which, I mean, if you remember, every time you were offering on a property, there were 8, 9, 10 other offers, and you got buyers that are literally, they're losing out just time and time and time again because it's such a competitive market. Right. So I think buyers forget that sometimes, or they don't understand that maybe it's good to get in now, given the situation, versus when the demand is just at an all-time high and the competition's out of control.
Like, what are some things that you would recommend to a client when entering into like a competitive market from your side of things?
I think it's understanding that what's the higher end of your budget? Like, can you extend that budget? Because if you need to get aggressive on price to win an offer, can you afford that extra 10, 20, 30 grand in price if you're in a competitive situation and you want to outbid anybody else? And then the other thing is, when it comes to time, efficiency, you want to make sure that in this market, time and speed wins. So if you're getting an offer and the seller wants to sell the place right away, do they want a 10-day close, a 20-day close, or do they want a 60-day close? A buyer, we can do a fully underwritten pre-approval ahead of time. So basically, once the buyer gets under contract, title, appraisal, and we're ready to go. So in that situation, we've got all their documents, we've fully underwritten the file, and we can do a quick close, which speed wins in this situation. As we're entering into the height of the spring market right now, what are things that you're doing to get your buyers ready for this market and to be competitive?
It's one of the biggest things in this job period is just setting expectations and educating. What I try to do is, like, all my buyers, I try to put them on like a buyer consultation where we walk through the whole process, start to finish, talk about the market. Like, I set the expectation for what comes next. When we go out there, they know they're entering into a market that can be fairly competitive. You know, if we see something on a Saturday, we might not have Sunday, Monday to sit around and think if it's the right fit. We might need to be ready to make a move. Part of that is, like, you know, putting them in touch with a good lender that can also help them set their expectations and kind of allowing them to be comfortable with moving fairly quickly.
You know, that goes to where assembling a good real estate team, a purchase transaction standpoint, is critical, right? You have your agent, you got your lender, your real estate attorney, inspector.
It's super important. And it's one of those things that it's almost difficult to convey how important it is to a client sometimes, because they don't understand, like, when you do so many deals with people, you understand the communication, you understand their cadence. Like, you might have a shorthand where they just know what you're expecting. When one of those people is taken out and someone else is put in, they might not be up to speed. They might not understand, they might not specialize in what we're doing. They might not understand how we operate or what comes next, or who should be on the email.
Like, you get some guy that says, I want to use my family's attorney or my friend's that's an attorney, but they're not a real estate attorney. They might be
litigator or personal injury.
And even though they think that they understand the law, there's laws in general are just, I mean, they're grandiose. So real estate law is probably night and day versus, corporate litigation.
Yeah, I mean, I've been in that situation where they use an attorney that's not a real estate attorney and they want to make it into a bit of a fight, right? Like, some attorneys have this want to, like, argue and fight. The real estate transaction, like, we're all working towards the same goal. We all need to be on the same page and work together. Sure, there's going to be negotiations and maybe some back and forth, but at the end of the day, Seller wants to sell, buyer wants to buy. Like, let's all work together so that both clients have a great experience and end up with the best outcome.
And I know from a lending standpoint, I mean, we talk about this all the time, the importance of using the lender that you refer versus just an online lender that you never heard of before. There's some just internet company that's almost like an endless black hole. For you and conveying to the buyer the importance of using my preferred lender for yourself, what are you conveying to the buyer and why?
Part of it, quite frankly, is selfish. Because if that buyer ends up going with one of these online places where you try to get a hold of someone and it's a new person every time, and one person does one portion of underwriting and then they hand it off to someone else that doesn't know what's going on. There's too many people involved. And as an agent, for me to keep the communication lines going with my client, with attorney, with the other side, if I can't get a hold of somebody, whether it's after 5 p.m. or on a Saturday or whatever it is, it's invaluable to be able to pick up the phone, shoot a text, get a response, know what's going on, and not be stuck in this black hole of not knowing where you're at.
Obviously, I try and let the buyer know one of the benefits and the importance of using a lender like myself. One, from a communication standpoint, the buyer knows that they can get a hold of me, whether it's via phone, text, email, basically 24/7. They need a question at 10 o'clock at night. They need something on a Saturday, on a Sunday. They're gonna get a response. They're gonna get help for whatever they need. This is the biggest purchase of this person's life. They're not at the farmer's market. Something that you don't wanna just cheap out on and say the cheapest is best, because we all know, and it happens to all of us in the industry, people are, a lot of times, they're hyper-focused on rate.
Yeah.
So it's like, who's giving me the lowest rate? It's like going to a doctor. You want just the lowest rate, you go to a doctor and say, who's gonna give me the lowest rate on this surgery? Well, good chance that the guy that's giving you the lowest rate is probably gonna do a not such a great job, right? So,
to put it nicely, right?
Yeah. There's a premium to have good service, good communication, and somebody that's in your corner and that's gonna guide you through the process, hold your hand, especially first-time homebuyers. I don't think a lot of them realize how much information and education and variables that go into the process. It's important that to have somebody that's gonna take good care of them. The difference in, let's say, maybe 0.1% in interest rate might only be $12, $18, $25 a month. I'm not trying to discount money. I understand the importance of it. You get what you pay for. So to have that premium of paying an extra $20 a month to make sure that the process is smooth, stress-free, gets you to the finish line on time. And these are important things that I think that go unnoticed a lot, or not, realized from the buyer, which is very important.
One thing that we see a lot is that shopping rates. You might not want to hear this, but I do tell my clients, shop around, see what's out there. But at the end of the day, who you're working with matters. If the buyer has a lender where there's multiple offers, I'm communicating with the agent, their lender can pick up the phone, call that agent, has a rapport with that agent. That could give us the nod in a multiple offer situation, or it can help us in negotiation. Rapport is such an important part of the offering and negotiation process. What happens a lot is people might get pre-approved with you, for example.
Right.
They get an offer accepted, they see your name on it, they might have done dozens of deals with you in the past or whatever it is, and then, oh, we're under contract now, let's start to shop our rate around. Rightfully so, right?
Sure.
You should do some due diligence.
Of course.
But I think there's something to be said for the fact that your name is on that pre-approval, your name was part of the offer package that got approved. If it's you, I know you've given them a lot of time and effort and education. What I always tell my clients is if it's close or all things similar, go back to Scott, talk to him. He's put in the time, effort. He's a big part of why this deal came together. So I'm curious, I know that's something that must get frustrating for you. It's almost for me, if I work with a client for weeks or months or whatever it is, and then they go see one place with someone and work with them, it can get frustrating. It's part of the business. So I'm just curious, your 2 cents on that.
In this market, when rates are elevated, you tend to see a lot more shopping around. People are more hyper-focused on rate than ever. I'm very competitively priced in the market space. Can you go online if you dig deep enough and just call a million places? Can you get a better rate? For sure you can. There's no doubt. But again, that also correlates with the level of service and professionalism that you're gonna get. So like we've talked about, when it comes to the rate environment, and I'll tell the buyer, listen, go out. If you wanna shop around, that's okay. In the end, come back to me. If I'm not giving you the best rate, let me know what you're getting. I'll come as close as I can to matching it, if not match it as well. And if you're getting some deal that I can't even come close on, I'll be upfront with you and say, listen, that's a great deal. I would take it and run. I'll give give them the go-ahead to do that. And hopefully by me being honest and giving them that advice, hopefully in the future when they have family or friends or whoever looking, they might say, hey, like, you need to get a mortgage. Maybe I went to this credit union because I'm a member of the credit union, but you're not a member. So you're looking for somebody who's going to take care of you. Oh yeah, there was this guy that I remember I talked to, Scotty Schneiderman. He was great.
Yeah, he shot me straight.
Yeah, he shot me straight. He was honest with me. He gave me all the guidance and advice, and still to this day, I remember that guy. And I have people that will reach out to me years later and say, oh, my friend told me to reach out to you. I know they didn't use you, but said you were a great guy and they remembered you. It's a very competitive market. It does get frustrating at times, but you're not going to win every deal, even though we'd like to. But we're going to be competitive. We're going to get the client the best rate possible for their situation. And then again, we hopefully that we all move forward together, because the importance of having a championship team when doing a real estate transaction, we talk about it all the time, is super important. You replace that lender, you replace the attorney, the inspector with some outside source, there's a lot of potential for things to go wrong.
That's something that I try to convey to my clients a lot as well, is that there's a reason that I trust these people. It's not my first deal. I have to go to people that I know will give you a really good service, that are responsive to you and to me.
Right.
We're not gonna get to the closing table and someone's gonna throw their arms up and say, oh, I don't know what happened. Somebody dropped the ball, because that's the worst case scenario.
Sure.
So I think it's important for people to realize it's not just about who can get you the best rate or who will do it for the cheapest, who can get you the best results and who can get you closed and happy at the end of the day, because that's invaluable. You can't put a price on how much that's worth. I'm with you.